Ever wonder what's really going on inside a giant company like Nike? I mean, beyond the swoosh, beyond the ads, how much do you really know about how the business, actually works? That's what we're doing today. We are taking a deep dive into Nike Inc.'s Form 10K annual report. This one's for the fiscal year that ended May 34th, 2024. And this isn't just number crunching. It's looking directly at how one of the biggest brands on the planet operates day to day, how they're handling things. We'll break down their business parts, look at the financials, see how they're giving back to shareholders, and get a real sense of where they're headed. And the challenges, too. And the cool part, this is straight from Nike. It's their own official report.
Exactly. And that's the beauty of a 10K, right? You cut through all the marketing speak, what you get is the raw, factual stuff. A really grounded view of the company's health, how things actually run, and importantly, where management sees things going. It's the unvarnished truth.
Okay, so let's unpack it then. Nike, huge global player. We all know the products. But under the hood, how is this massive company actually put together? What are the core things they do to bring in, over $50 billion a year?
Well, at its heart, Nike designs, develops, markets, and sells athletic stuff. Footwear, apparel, equipment, services, you name it, worldwide. They are, quite simply, the world's biggest seller of athletic shoes and clothes. And the portfolio includes the main Nike brand that covers performance and lifestyle for men, women, kids, but also, big names like Jordan Brand and Converse.
Right, Jordan and Converse, can't forget those.
Yeah.
So they make all this stuff. How does it get to us, the consumers everywhere? And what were the big shifts in how they sell things in fiscal 2024?
They use two main channels. First, there's Nike Direct. That's their own stores, their websites, their apps, what they call Nike Brand Digital. And then there's the wholesale side. So selling through independent distributors, licensees, other retailers. Basically, stores that aren't Nike owned. Now, here's a key number from fiscal 2024. Total revenues, $51.4 billion, which was a 0% change from fiscal 2023.
Right.
Flat.
Hold on, flat. 0% for Nike. That sounds not great. Stagnant, almost. What's going on there? How does a company that big just tread water on revenue?
Well, that's why we dig into these reports. See, while the reported number in US dollars looks flat, if you look at it on a currency-neutral basis, so taking out the effects of changing exchange rates, revenues were actually up 1%.
Okay, only 1%, but up. That's a really important difference.
It's crucial. It tells you that despite, global economic stuff and a strong dollar hurting their international sales when converted back, the underlying business activity actually grew a little. It suggests they managed to navigate some of those wider pressures, even if the main headline number doesn't show it.
Okay, that makes sense. Now, this is where I find it gets really interesting. Let's zoom in on just the Nike brand. That's like over 90% of their business, right? Within that, what happened with their big push for direct-to-consumer sales versus the traditional wholesale business?
Yeah, good question. So for the Nike brand specifically, revenues did nudge up 1%, reported and currency neutral, came in at $49.3 billion. Looking at the channels, Nike Direct, so selling straight to you, that grew 1% to $21.5 billion. That's about 44% of the total Nike brand money. And that growth mainly came from people spending more in existing stores, comparable store sales up 3%, and also opening new stores. But, and this is a big but, Nike brand digital sales, their online stuff, actually went down 3%, fell to $12.1 billion.
Down 3% online. Wow, that seems counterintuitive given the focus on digital.
It does. The report says it reflects reduced digital traffic, so fewer people visiting their sites or apps maybe, which is definitely something to watch. Interestingly, though, their wholesale business, selling through other retailers, actually saw a little bit of a pickup. It was up 1% reported and 2% currency neutral.
Okay, so digital traffic down, but wholesale slightly up. What about the actual products? Shoes versus clothes. How did they perform for the Nike brand? Because overall revenue was slightly up, but digital was down. It's a bit confusing.
Right, let's break down the products. For Nike brand footwear, revenue was up 1% currency neutral. Jordan brand, men's, women's led the way. But here's the fascinating part. The actual number of shoes sold, the unit sales, decreased 2%.
Wait, they sold fewer shoes but made more money on footwear.
Exactly. The growth came from a higher average selling price per pair. It was up 3%. So fewer shoes, but more expensive shoes on average.
Huh. And apparel.
Apparel revenue was flat, currency neutral. But unit sales there dropped even more, down a significant 9%. Again, higher average selling prices, up 9%, completely offset that drop in the number of items sold.
So fewer shoes sold, way fewer clothes sold, but revenue holds up or even grows because prices are higher. That's quite a strategy. What'd that signal?
It screams premiumization. They're clearly focusing on selling higher value items rather than just chasing volume. Make more profit per item, even if you sell fewer items overall. It's a classic move for a strong brand like Nike, especially when consumer spending might be tight. Leverage the brand power, command higher prices, less focus on discounts maybe.
Makes sense. And geographically,
Yeah.
Nike's everywhere. Did this play out the same way across the globe for the Nike brand? Was everyone paying more for fewer Nikes?
Not quite evenly. Greater China and the Asia Pacific and Latin America region, APLA they call it, both saw revenues go up. Greater China was strong, up 8% currency neutral. But North America and EMEA, that's Europe, Middle East, and Africa revenues were basically flat or slightly down, currency neutral. And in North America specifically, wholesale revenues actually dropped 2%. They said part of that was because they were clearing out a lot of excess inventory the year before, so the comparison was tough.
Okay, so that's the main Nike brand. What about Converse? That's their other big piece, right?
Yeah.
How did Converse do in this environment?
Yeah, Converse really struggled in fiscal 2024. Revenues there dropped significantly, down 14% reported, 15% currency neutral to $2.1 billion.
Wow, double-digit decline.
Yeah, and its operating profit, EBIT, fell even harder, down 30%. Ouch. The report points to declines mainly in North America and Western Europe, and also mentions more promotions, more discounting basically, which hurt margins. So a very different story for Converse compared to the core Nike brand.
Definitely highlights that even within one company, performance can vary a lot.
Absolutely. And we should just quickly mention they also have these global brand divisions and corporate segments in the report. These mostly cover shared costs like, central design, tech, managing foreign currency effects. Interestingly, the loss in the corporate segment actually went down this year, partly due to favorable currency moves and lower wage costs, although that was offset somewhat by some pretty big restructuring charges they took.
Right. Restructuring. We should circle back to that. But first, with all these moving parts, flat overall top line, this shift to premium pricing, digital slowing down a bit, Converse struggling, what does it all mean for the bottom line? Let's talk profitability, efficiency.
Okay, yeah, profitability. Despite the flat revenue, Nike's gross margin, basically the profit they make on each sale before operating costs actually went up, and by a good amount. 110 basis points or 1.1 percentage points, it landed at 44.6% for the year.
That's a pretty healthy jump in margin, especially with flat sales. How did they manage that? Was it just the higher prices?
That was a big part of it, yes, those strategic pricing actions we talked about. But also, importantly, lower ocean freight rates and logistics costs helped quite a bit compared to the prior year. Supply chains easing up, maybe? Now, it wasn't all good news for margins. Higher product input costs, so raw materials and manufacturing, did bite into it. And margins were actually lower in their own Nike direct channel. Plus, those unfavorable currency exchange rates hurt here too.
Okay, so margin up overall. What about their operating expenses? Selling, general, admin costs?
They're up slightly, just 1% overall. If you break it down, demand creation thing, advertising, athlete endorsements, that was up 6%. They spent more there, but operating overhead expense actually stayed flat. They had lower wage costs and tech spending, but that was balanced out by those restructuring charges we mentioned earlier.
So costs more or less contained. Where did that leave net income, the actual profit at the end of the day?
Net income looked pretty good. It increased 12% to $5.7 billion.
A 12% jump in profit on flat revenue. That's impressive.
Yeah, the margin improvement really flowed through. And one other factor was their tax rate. Their effective tax rate went down quite a bit, from 18.2% to 14.9%. The report says that was mainly due to changes in where their earnings came from globally and a one-time tax benefit related to some updated U.S. foreign tax credit rules.
Okay, interesting. Let's switch gears to the balance sheet and cash flow. Inventory was a huge headache for retailers recently. How's Nike looking there? And, fundamentally, where's the cash coming from and where's it going?
Right, inventory. This is actually a real positive story in the report. Nike's inventories decreased 11% compared to the prior year, down to $7.5 billion. And that drop was mainly because they have fewer units on hand. The report frames it very positively, talking about proactive actions taken to manage inventory supply suggest things are much healthier, much more balanced now.
An 11% inventory drop. Yeah, that sounds like really good management, especially after all the overstocking problems we saw across retail. Is there any downside, though? Could they be too lean, maybe miss out on sales?
It's always a balancing act. That's a fair point. You don't want to be so lean you can't meet demand. But the report really emphasizes this as a sign of strength and efficiency. Given their strong cash flow, which we'll get to, and the talk about improved lead times, it suggests they feel confident they can manage supply effectively. It feels like a deliberate move away from the risk of getting stuck with too much inventory again.
Okay, so inventory looks good. What about cash flow? Is the cash flowing strongly?
Very strongly. Cash from operations was $7.4 billion. That's a big jump from $5.8 billion the year before.
Nice increase. Why so much better?
A lot of it ties back to inventory. They spent less cash buying new inventory because levels were coming down, and those improved lead times helped too. It's just, really healthy cash generation from the core business.
And where'd that cash go? Investing, financing.
Well, cash from investing activities actually showed an inflow of about $894 million, mostly from managing their short-term investments. But cash used in financing was a big outflow, $5.9 billion. And that was primarily driven by two things: buying back their own stock and paying dividends to shareholders.
Shareholder value.
Yeah.
So for you, the listener, maybe you own Nike stock, maybe you're just watching the market. What are they actually doing to reward investors? What do these numbers tell us?
They're definitely committed to returning cash. Back in June 2022, the board okayed a massive 4-year, $18 billion share repurchase program. As of the end of this fiscal year, May 31st, 2024, they'd already bought back almost 85 million shares for about $9.1 billion under that plan.
Halfway through the program amount already.
Pretty much. And just in fiscal 2024 alone, they spent $4.3 billion on those buybacks.
Wow. And dividends.
Dividends, too. They paid out $2.2 billion in dividends during fiscal 2024. That's up from $2 billion the year before. So increasing returns there as well. And critically, they're funding all this, the buybacks, the dividends, mainly from that strong operating cash flow we just talked about. It's not like they're borrowing heavily to do it, which is a good sign.
Okay, so they're generating cash and giving a lot back. Looking forward now, what are the big plans? What are Nike's main strategies to get growth going again in what's still a pretty tricky global economy? And what risks are they worried about?
Their core aim, they say, is sustainable, profitable, long-term growth. And the plan is to do that by creating really innovative, must-have products, think the next big shoe tech or apparel line. Also, building deeper connections with consumers and delivering really good experiences, both online and in their stores. Now, that restructuring we mentioned, that's a big part of the near-term strategy. It was announced mid-year, a multi-year plan to streamline the company. It involved a net reduction in jobs globally.
Layoffs, basically.
Essentially, yes. And it led to a $443 million restructuring charge hitting the books this year. But here's the interesting bit. They expect most of the annual savings in wages from this restructuring will be reinvested back into the business, specifically into growth areas and innovation. So cutting costs to fuel future investment.
A classic corporate move. Any other big investments?
Yeah, they're also putting money into a big global ERP system that's enterprise resource planning, basically the software backbone of the company, and heavily into data and analytics, trying to get faster and more efficient.
Okay, that's the plan. What about the hurdles, the risks they see?
Oh, there are plenty, and they list them out. Intense global competition is a big one. You've got Adidas, New Balance, Lululemon is huge now, lots of others fighting for the same customer. Global economic conditions are obviously a risk. Inflation, interest rates, recession fears, all that hits consumer spending on non-essential stuff like new sneakers. Then there's volatility in foreign currency rates, which we saw impact their reported revenue, and changes in commodity prices affecting their costs.
Supply chain still a worry.
It's still listed as a risk, yeah. Supply chain disruptions, trade policies, tariffs, all that geopolitical stuff can cause problems. Also, the increasing focus on sustainability and climate change that could mean higher costs, more regulations to deal with. And related to their strategy, there are risks around their big investments in Nike. Direct those stores and digital platforms cost a lot to run. Plus, just keeping up with rapidly changing consumer tastes is always a challenge. And finally, like any big digital business, cybersecurity threats and dependence on IT are constant concerns.
Okay, so lots to juggle. If we pull this all together then, strong cash flow, this focus on premium products and direct sales, but also significant headwinds in competition. How do you rate Nike's position overall moving forward? Are they looking solid, or is this a bit of a challenging period?
I think they're positioned for continued adaptation. The investments in innovation, the direct-to-consumer push, the strong brand, these are major assets. And that robust cash flow gives them a lot of flexibility. Yes, they face real risks, the economy, competition, currency swings, but their scale, their brand loyalty, and this clear focus now on efficiency, like the restructuring and reinvesting in growth. These are critical factors for resilience. It's definitely a dynamic situation, managing costs while driving innovation and responding to what consumers want. But their foundation seems pretty solid to stay a leader in this market.
Right. So that wraps up our deep dive into Nike's 2024 10K. We've seen a giant navigating some tricky waters, but doing it with clear strategies, especially around premiumization and managing their channels. And the financials, particularly that inventory control and cash generation, really stand out. So what strikes you most about how a company like Nike juggles being this huge global entity while trying to connect locally and manage all this complex financial stuff? And how do you see those big bets, direct sales versus wholesale, higher prices versus volume playing out against all these economic uncertainties? It really makes you appreciate the complex dance between supply chains, brand power, and financial strategy needed to keep a brand like Nike not just running, but leading the pack. Something to think about.